Yo, what's up everyone? And Gary Bettman Investments back with another video. In today's video, we're going to be looking at Bitcoin and the key level of 17.5K to 19.5K and why I think this is a key area for the bulls to hold going forward. I'm also going to look at the similarities between the 2013 cycle bottom and the 2015 cycle bottom and how that could be playing out right now. Before I get down into that, there's a link down in this description for this new crypto that's coming on September 12th called Sweatcoin, and they're going to be called Sweat. Pretty much it's free. You just have to walk to generate Sweatcoins. And if you're interested in that, there'll be a link down in the description. But let's get down into the video now. So what I'm seeing right now is this zone is still valid, this 17.5K to 19.5K demand zone. The ideal scenario for me and probably what other people want to see as well is we create a double bottom here and then we shoot up. Or if that doesn't play out, we come up to this trend line and we get rejected and we move back down similar to up here and here. Obviously, if this zone doesn't hold, the main area, like the monthly supply zone or demand zone rather, is at 11.6K. And then obviously these smaller demand zones that I have these lines here are on daily. So like the 17.2, just a little bit above 16K, and then 13.8K. Those would be the key areas you should look for if price does decide to break this weekly zone. But if we take a quick look at the 2013 cycle, we're going to notice that price came down and then we had this bottoming out phase, which was pretty much just a triple bottom right here. And in this triple bottom, we created this horizontal range here, your range high here, your range low here. So if this ends up playing out on the current cycle now, and you're wondering where should I buy or where should I accumulate or whatever, the best areas to accumulate would be right at the bottoms. But if you're not comfortable doing that, the other option would be buying when the range breaks to the upside, and then looking for targets to take profit if you're in a trade. And obviously in this case, if we take our Fibonacci from swing low or swing high to swing low, you saw that you could target the 0.5 fib level since it touched here and touched here again. So that's a way you could play it going forward on this cycle. Wait to see price go back up and then come back down, create a triple bottom, and then eventually move up or move to the upside. And then once again look for the fib. The 0.5 fib level is your target. That'd be just waiting for this area of resistance to break and then go long. But if you don't want to play that way, the other option is wait for a bullish candlestick, similar to this bullish engulfing here, or these hammer candles here that I mentioned in previous videos about candlestick patterns. Wait for one of those to show up on the weekly and then take an entry and look for an upside move. Still think 30K is still possible if this level holds. That's how I'm looking at it right now. But yeah, like that's pretty much all I had to for today. It's very important we hold this zone here. Price is able to hold this zone for a bullish move up. If not, then we got to start looking at lower levels here. But with that said, If you enjoyed the knowledge I gave you, please like, comment, and subscribe. And I'll see you guys in the next